Today, I just want to make this video to really help you understand how and why the market moves, because the market has one main objective. A lot of people, they don't really understand this main objective, right? The market always wants to move in fair value, and as a result, you get two stages of delivery, and that is what I'm going to be breaking down within this video. So if you don't really understand how the market moves, if you trade futures, if you don't know why the market moves, make sure you watch till the very end, because I'm going to break down every single bit. The main thing the market is optimized to do is to facilitate as many transactions as possible. And that is what you guys have to understand. The market works based on an auction. It's basic auction market theory, right? If you have an auctioneer who is advertising a car, a single car, there's only one car, and you have multiple bidders bidding for that specific car. Let's say, right, he's advertising the car for $100. There's going to be a large number of bidders bidding for that car. It's common sense, right? So because there's only one car and there's multiple demand, aka the demand is overwhelming the supply, then the bidder, the auctioneer, has to advertise a higher price. So instead of advertising $100, he's going to advertise $200, $300, $400, until eventually he finds that single price point that is high enough where there is enough demand to fulfill, or where there's enough supply to fulfill the demand. So let's, for example, say at $1,000, there's still one supply, right? The car's still there. It hasn't moved. But there's only one person who's willing to buy the car at $1,000. Then the market has moved from $100 to $1,000, where they've been able to successfully facilitate the outstanding demand for that single car at $1,000. So that is how the market moves from 100 to 1,000. Vice versa, if you're looking for lower prices, right? It's the same thing every single time. If there is more demand than supply, the market is going to either move higher if there's more buying demand, or move lower if there is more selling demand. To facilitate transactions, and in order for transactions to be facilitated, passive buyers have to be paired up with aggressive sellers, and passive sellers have to be paired up with aggressive buyer. It's basic auction market theory. It doesn't get any more difficult than this. It's extremely simple to understand. So once you understand this, once you understand the auction market theory, you will understand that the market has one main objective: to find levels of fair value, to find levels of balance where they are able to find satisfaction between both buyers and sellers. This is where it's able to facilitate as many transactions as possible. That is the main aim for the market. So as a result of the market facilitating as many transactions as possible, being its optimal condition, being its main goal, you get two states of delivery. The two states of delivery is extremely simple. You get an imbalanced state of delivery where one side is heavily in control, and you get a balanced state of delivery where both sides are in control. Both sides being in control means you get a consolidated price action. This is where you get responsive buying at the lows, responsive sellings at the low, as the market seeks to play within this range. As here, the volume is going to build higher. So if you look at it from a volume profile standpoint, you would get something like this. Right? If you mark your dynamic volume profile, composite volume profile, whatever, right? If you have a volume profile here, this is going to be a low volume node. This is going to be a low volume node. However, this is going to be a high volume node, because this is where the market found balance. And this is the main thing. You always want to identify balance, because this will build the narrative. This will set up the framework for where the market is likely going to head next. Because let's say you get this sort of price action, right, where we are expanding higher, consistently expanding higher. This isn't a healthy trend. The reason why this isn't a healthy trend is because volume is very little from this low to this high over here, right? There was very little volume that was facilitated, and the main thing here was there was just a large number of aggressive buying compared to a small number of passive selling. As a result, the market moved higher significantly and extremely fast. So the market spent very little time within this range low to the range high, and there was very little volume facilitated. That's the main thing you have to understand. The reason why this is unhealthy is because we haven't found acceptance yet. In order for the market to find acceptance, it has to eventually come into some form of a consolidation, because this means both buyers and sellers are satisfied at that level. And if that acceptance happens at a higher price, then that is going to be a healthy uptrend. So now, a healthy uptrend would look something like this, where you get that expansion higher, and then we get acceptance until eventually buyers become more aggressive, and then you get acceptance again. And it's the same thing over and over again. So these levels are going to be your accepted price ranges. These levels are going to be your accepted price ranges. And this one over here. This, in comparison, to this imbalanced state of delivery is extremely healthy. Again, if you mark out the volume profile, you're going to get large volume spikes over there, large volume spikes over here, low volume node, and large volume spikes over here. This is going to be crucial to understanding acceptance. More volume means more transactions were facilitated. And in general, if there is more transactions that were facilitated, then you could assume the market has found acceptance there. That is the main thing you guys have to understand. That is the main point of this video. It's extremely easy to understand, right? It doesn't get any harder than this. It's extremely simple. So this is the two states of delivery, balance and imbalance. And that is how the market moves. It always moves in this way. If you look at chart examples now, and remember, the market is fractal, right? So whatever you get on the 3 minute, 2 minute, 1 minute, 4 hour, 1 hour, daily, weekly, it's going to be the same thing. The weekly is just going to, the higher time frame you go, there's just going to be more volume. The levels are more likely going to hold. But on a lower time frame, you get the same thing. This is literally how the market moves. This is just on a really fractal standpoint, right? Here, look at what you get here. You get that bounce higher, consolidation. Price starts to consolidate. Aggressive sellers get more aggressive. They continue lower. And then they start to find acceptance, right? If they come lower, right? If sellers become more aggressive, but they fail to find acceptance here and buyers quickly take back control, there's a good chance we come back to this initial range before we find acceptance. And then we continue higher, right? But because buyers were able to find acceptance here with sellers after we had that selling aggression at a lower price, then you could assume we are likely going to continue lower, right? And that is what you get here with these consolidated price action, right? Every time you get a consolidated price action, you would assume the market is finding acceptance. Now, obviously, this is the 3 minute, and this is specifically looking at NASDAQ, right? London, Asia session is not going to be so clear for this specific example. But if you draw it out from a dynamic volume profile standpoint, right, you could see where it's pretty hard to see, but bear with me. Here, you can see a lot of volume spikes, right? Volume spikes above here, volume spikes here, where you have the consolidated range, volume spike here, where you have this consolidated range. It's pretty difficult to read, but you have a low volume node here, and that is this imbalanced state of delivery, this very miniature balanced state of delivery. The reason why I wanted to show you this rather than show an extremely clear example first is because you have to understand not every single price action, not every single pattern you see in the market is going to be extremely clear, right? It's like a snowflake. Not every single pattern is going to look the same. Not every snowflake is going to look the same, right? Yes, the ideal scenario would be if something was as clear as this, but the market does whatever it wants. It's not always going to be clear, right? You just have to understand that where you get large volume spikes, where you get consolidated price action, if it's slowly going lower, that is going to be a good confluence for a healthy bearish downtrend. Because every time sellers got more aggressive, they were getting rewarded and buyers were able to find acceptance here, right? Sellers become more aggressive, buyers also agreed with lower prices. It would be an issue if you get something like this, where we have a balanced range here, sellers get more aggressive, but buyers didn't find acceptance below here. Buyers were not satisfied with lower price action, so they respond with responsive buying, and they aggressively buy back into our previous range. Here, multiple things could happen. We could either balance again, right? Because this was previously a level where both buyers and sellers were satisfied, or buyers become more aggressive and break up, or sellers take back control again and break below. But these phases, it's very important that you have to find acceptance afterwards. If we fail to find acceptance afterwards, then we could just return back into this range over here. It's extremely simple. That is all you are looking for. And now, because you guys made it so far already, I'm going to reward you with a clearer example, right? This is the clearest example. So look at what you have here. Consolidation. Aggressive sellers get more aggressive. Bring price lower. And then you get consolidated again, right? As long as we don't return back into this level and the consolidation continues to happen at lower prices, then you would assume we are in a healthy downtrend, right? You get consolidation here until eventually sellers get more aggressive, but they don't get rewarded. Aggressive buyers respond, bring price back inside this range. And instead, look, we shoot above the range, we retrace below because this is the balanced range. When you have consolidation, it is the most optimal condition for the market to be in. Never forget that. So anytime you break above the high or you break below the range low, you would assume that the opposing side would try to bring price back inside that range. So because here we had a large pump higher, the opposing side, in the form of aggressive selling or passive selling, they're going to try and bring price back inside this range, because this was the latest range where we found acceptance. And ideally, they want to facilitate transactions within this range. But if aggressive buyers overwhelm selling supply, overwhelm aggressive sellers because they desperately want to go higher, then this is what you get. You only get a retracement before we get that bounce higher, and we have a consolidation over here, right? Focus on the consolidation high and the consolidation low. Anytime we come up where we have large aggressive buying, they get absorbed. They don't necessarily get rewarded with higher price action because passive sellers are protecting this level. It's the same thing when you go lower. You have large aggressive negative delta, which represents, so delta is the difference between aggressive buyers and aggressive sellers. So when you have negative delta, that means aggressive sellers are in control at this specific level. This is my delta cluster, right? So these large aggressive selling, you would expect them to get rewarded because they are in control. However, they don't, and the market bounces back inside our consolidated range because this means passive buyers are protecting this level. So passive buyers actively protect the range low, passive sellers actively protect the range high. So anytime we are in a balanced range, that is what you can expect before aggressive buyers get more aggressive again. They have more demand, and we break above the range high, and we have a large expansion higher. Now, this large expansion higher, we started to find acceptance here before aggressive sellers took back control and come back lower. And we started to find some acceptance here before aggressive buyers become aggressive again and they break above this range high. So now the question becomes, as we come back into this level, are we going to get balance around this level before we come higher? Or are we going to get balance and sellers take back control to come back into this level? Those are the many questions that remain. However, the most likely scenario that is going to happen is going to be balance first before we get anything else, right? Even though this previous example, aggressive buyers pretty much just shot through the initial balance range, theoretically, most of the time, you're just going to get a balanced range again once you retest this level, because that is what the market is aimed to do. The market has a good memory. So when you come back, so these balanced ranges in the future are going to act as continued balanced ranges on retest. So you would anticipate for consolidation as we come back into this level, as previously both buyers and sellers were satisfied at that level. That is what you would expect for the current price action. But this is how you read, in terms of balance ranges, in terms of imbalance ranges, this is how you determine a healthy trend versus an unhealthy trend. So now you might be wondering, Hugh, how do you play these ranges? How do you actually take trades from these ranges once you identified the balanced ranges, once you've identified the imbalanced states of delivery? Look very closely, right? It's the same thing over and over again. You build a narrative. Here we have a balanced range. We come back into the balanced range. We find some sort of acceptance before aggressive buyers get more aggressive and they break above the high. Now you're looking to see if we could build acceptance here. We build acceptance here. Aggressive sellers, they try to bring you back inside our initial balance range. However, they failed to do so. And as a result, these aggressive sellers were absorbed, right? Anytime you have any aggressive participant, whether it's aggressive buyer or aggressive sellers heavily in control, but they don't get rewarded with either lower or higher price action. So if you have aggressive selling in control and they don't get rewarded with lower price action, or you have aggressive buyers in control and they don't get rewarded with higher price action, then you would assume there is more supply than demand. They are absorbing all of those aggressive demand, and as a result, the market doesn't move any lower. Absorption does not move price. Supply does not move the markets. It goes back to the auction example, right? The auction example we had at the start of this video. What moves the market is demand. The market is not going to go higher or go lower if there isn't any buying demand or selling demand. The auctioneer isn't going to increase the price for the car if no one is willing to buy at that specific price. So that's why you want to see initiation. Once you have absorption, you always want to see a follow through with initiation, because this means in this specific example, these aggressive sellers were absorbed by passive buyers and aggressive buyers stepped in to bring price higher. So that is what you want to see for a good high probability reversal, right? Going back to this example. So sellers couldn't find acceptance. We come up, aggressive buyers take back control, and then we start to consolidate around here. Coincidentally, it overlaps with our previous balance range. Nothing is random, right? I say coincidentally because it's funny. nothing is actually random. We come back, we find balance because previously we were in a level of balance before aggressive buyers take back control. So now, once aggressive buyers take back control again, you're getting another balance range. This is the range here. Clear balance range where we consolidate for pretty much years. No, I'm joking. This is the 80 range. So we only consolidated for 10 minutes, right? But nonetheless, this was much longer than these ones. So now, when you have this range, right, you can play within the range if you want. Because anytime we come up to the range high, look at what you get here. You get large aggressive buying, no reward, aggressive selling follow through. You could look to short to the range low and long to the range high. Same thing. Aggressive sellers, no reward, aggressive buyers, step in. There's a reason why this is a balanced range. There's a reason why this was a range in the first place. Because at the range lows, passive buyers are protecting this level. At the range highs, passive sellers are protecting this level. This is where the market is facilitating transactions. Again, if you draw the dynamic volume profile, where are you getting the most volume? Here. You're getting the most volume here, where you had consolidated price action, and you're getting the most volume here, where you have this consolidated price action, right? So the market is always going to try and stay within this range based on its aim, based on its objective to facilitate as many transactions as possible. Hence why you're able to play this range. However, when you're looking at this range specifically, it's pretty tight. It's a pretty tight range. So your risk to reward isn't going to be that high, right? If you target the range high, but it's entirely up to you. It's completely solid and it works. So you can take it if you want, but I'm just warning you, the risk to reward isn't going to be as high as if the range was going to be much larger, then you can start to play those ranges, right? But with this specific example, tight range, best thing to do, wait for a range high break or a range low break, which is exactly what you get here. So now that we've broken above, the first thing you want to see when we've broken above is if the opposing side is able to protect it or not, whether it's passive sellers or aggressive sellers. Here, because we've broken above and these aggressive buyers all got rewarded, right, with their initiation higher, they got rewarded with higher price action. That means whoever was here previously, right, the passive sellers here previously that absorbed these orders and this order over here was not present anymore, either because they had no interest in protecting this level or aggressive buying demand just overwhelmed the selling supply. So the selling supply becomes exhausted. However, when you get this retest off the range high, this is what you get. You get large aggressive selling stepping in now. This is aggressive selling. Previously, these were passive selling, right? Passive selling that absorbed these aggressive buyers. You can't absorb aggressive buying with aggressive selling. Aggressive participants always have to be paired up with passive participant. That is how a transaction gets facilitated. You can't have an aggressive buyer pair up with an aggressive seller because they are both market takers. They are not market makers. They do not provide supply and they do not provide liquidity to the markets. They only provide demand. So hence why when you have this is a large aggressive seller. Now, this becomes a level of confirmation. The reason why this becomes a level of confirmation is because aggressive sellers clearly took control here and they clearly got rewarded with lower price action. However, you want to see aggressive sellers follow through if we really was to return into this range. If we fail to follow through, which you see from the next candle with these aggressive sellers getting absorbed, then there is a good chance we are going to continue higher. But that isn't confirmed until we break above this protection level. This is the protection level. Aggressive sellers are protecting this level. So when you play price out, that is exactly what you get here. And you get additional confirmation with these aggressive selling delta not getting rewarded with lower price action. So aggressive buyers here are clearly taking control. They're clearly getting rewarded with higher price action. And any aggressive sellers that do take control, they are being absorbed. They are further being absorbed by passive buyers, and then aggressive buyers step back in. So this is where you can look for an entry, right? Stops below this low, and you can look to target either a rounded number or the next high, right? Let's say we target a rounded number. You get tagged in on the next candle's open, playing price out. We eventually hit our TP. It's as simple as that, guys. It doesn't get any more difficult. This is all it is. You're just playing. Once you've identified the balance range, you're either playing the balance states of delivery or you wait for a break. Once you've gotten a break, you're capitalizing on the imbalance state of delivery. It's as simple as that, right? That's all there is to it. That is how the market moves. Those are the two ways the market moves as a result of the market's objective to facilitate as many transactions as possible. Those are the two states of delivery you would get every single time. You could backtest this, forward test this, and see for yourself. There will always be a balance range, imbalance range. If we fail to find acceptance, then you get lower prices, balance range again. Right? The markets just move from ranges to ranges because that is where you're getting acceptance. Like always, I hope you found this video helpful. If you want to dive deeper into these concepts or anything just trading related, right, have someone hold your hand from whatever trading stage you are at to consistency, then check the link in the description, as you can work with me one-on-one, and this is for lifetime. So I will always be there by your side. But apart from that, make sure you like and subscribe.